live here, live there, we're live here, we're live everywhere. Good afternoon, everyone. This is Roman Shersher, your #1 online resource for buying property. With your this week's edition of Buy, Invest, Sell, a broker's formula for real estate success. Thank you guys for joining me. It's been a couple of weeks. Please, guys, if you like this video, I'd love for you to share it on social media. It really helps get the message out. Our viewership has been increasing. I think we're on each one of these videos, we're up to about over 600 views, which is kind of cool. Just a little local real estate update from Los Angeles and Jacksonville, Florida. And so it's kind of cool that we're growing. I appreciate it. I thank you all for tuning in, checking us out. And please tap the share button and share it with your friends and family so we can continue growing this, all right? To anyone watching on Instagram, be sure to head over to Facebook or YouTube after to check out the links in the slides to the content I'm about to go over today. Remember, I use raw data, not opinions. Where I am injecting my opinion, I'll let you know, but it's based on data and what I'm seeing out there. All right. At this point, I've bought and sold hundreds of homes from all the way here from Los Angeles to Jacksonville, Florida. Been there for 11 years. I wrote a book packed with insider tips on how to save you anywhere from $10,000 to $100,000 of dollars. And most importantly, in tough times, in busy times, it's not just writing the offer and saving the money, it's getting your offer accepted. So wrote a book on tips and tricks on how to do that, what I've used, what the people that do large volumes of these real estate transactions do to save money and get the offer accepted. If you're interested, just DM me. I'll send you a free copy of the ebook version for free, no obligation. Let me know if you want to see it. All right, current projects. We are doing a flip in Jacksonville. We have a property that just came to market. We literally put it coming soon yesterday in Jacksonville. Congratulations to our buyers in Tarzana. We just closed on a home today. It was a tough loan situation, but we got it all done. Very excited. Going to be handing over keys. Honestly, my wife, her favorite thing to do in this business, there's ups and downs. Nobody loves everything about their job. But her favorite thing to do is to be able to hand over those keys to those new buyers that are super excited about moving into their new home. There's nothing more rewarding than in our business than that. So excited beautiful Friday TGIF, we get to do that today. All right, let's talk about our content. We got a lot of stuff going on. The market's interesting and it's difficult. And so I'm going to talk about the first thing that's happening out there right now. So a lot of sellers are getting frustrated in this market. And so what we're seeing is a lot of people take their properties that are on the market off the market because of frustration. That's called delisting. And delistings have surged as sellers are refusing to budge on their price. I personally have two of our flips that we've been getting nothing but lowball offers on. Okay, I have a property in Woodland Hills. The property's value, the real value of this thing, based on comps, based on the quality of construction, we did everything in this home. It's worth $185. Okay, the last offer I got was $1.6 cash. I can't sell it for $1.6 cash. I just can't. So I'm taking it off the market and I'm going to use it as a rental and hold out until the rates lower. And at that point, there's a lot of buyers sitting on the sidelines. And once those buyers come back into the market and we see multiple offer situations across the board, like we did just last year in April. Just last year in April, it was a seller's market like crazy. We were getting 10 to 15 offers on every property. And those same buyers that were out there, they now decided, hey, we're just going to wait till rates lower. And these prices are going to lower too. Well, they're not lowering. Maybe they're lowering just a smidge if you're lucky. And those that are out there right now and making these lowball offers, sure, you might get lucky and get a discount. I am getting good amounts of credits. I am on some properties getting getting price reductions. And given the right circumstance right now, my negotiations are paying off, definitely. But we're not going to see 20, 30% price declines or price cuts on properties right now. There are motivated, there are super hyper motivated sellers that maybe need to sell, but there's no foreclosures out there. That's really the impetus for where real huge price drops occur. In the crash of 2008, the reason price drops were so significant was there was so many foreclosures going through the pipeline, and that is the one thing that we're missing. There's a ton of equity. All these people that are delisting their properties right now, they have a ton of equity. And so they're taking it off and going as rentals. There's still high rental demand here in Los Angeles, here and there in Florida, where I'm also at. So those delistings jumped 47% year over year. And it's changing. It's giving us a shift in market psychology. You have to understand, if you're going to be too aggressive, the seller's just going to say no. Like I have already for so many buyers on these properties. They're coming in, they're lowballing us. And even one in Northridge, I accepted a low offer. I was going to lose money on this offer. But then on top of that, they tried to tack on another $30,000 in credits. I can't accept it. I'm sorry. We fell out. So 20.7% of listings right now in June saw price reductions. So that's across the country. In the West, and especially in Los Angeles, that's even higher. 23% of listings cut their prices, and delistings are rising faster than anywhere else. So for every 100 new listings this spring, 13 have decided to just go away. 13 have decided to delist. It's the highest in the last of 3 years. So 13% of the properties are deciding, you know what? This is ridiculous. These buyers are just really lowballing the hell out of me. I'm just going to take it off and wait until the rates fall. And once they do, please understand as a buyer, if you're really holding out and I'm just going to wait and sit on the sidelines, once those rates fall, for every point of rate that comes down, you're introducing 5 million new buyers nationwide into that price point. So yeah, of course, you're going to have a lot more competition, and then you're going to see price hikes on that perfect home significantly more. You're going to pay a lot more over list. So I don't think it's a good idea to wait. I think if you're reasonable right now, you can get a good deal, and we're seeing a lot of good deals. Our buyers, we got them really good credits on this one. The property need a little bit of work, sure, but in the previous market where there were 15 offers, we wouldn't have gotten nearly this type of credit. All right, let's move on. All right, two things. Number one is rent is now cheaper than buying everywhere. Okay. Now, there were certain markets where it was actually more affordable with a 20% down payment to go and buy than it was renting in that same market. And that is now completely different. That is now completely not the case in all 50 of the largest U.S. metros. Okay. Average monthly mortgage payment across the country for medium price home is $2,768. Average rent is $2,000. Average difference of $768 per month or $9,200 a year. Of course, that's nationwide. That's not on the West Coast. It's not on the coastal cities. Let's put it that way. So over 3 years, those renters will save $28,000 compared to the buyers. Once again, coastal cities, that gap is much wider, right? The break-even point for buying versus renting has significantly stretched. Renting right now is a clear winner, especially if you're planning to be in the house for less than 5 years. The one thing renting does not do is it does not give you equity. Doesn't help to buy equity, build equity, sorry. And equity is what the biggest wealth builder in this country. Most of the people in their 50s, 60s that have owned homes for 20, 30 years, they're sitting on a ton of equity, which is why they're delisting so much, because they don't have to sell. It's not a they're not distressed, determined, super motivated sellers, and they're choosing to rent or just stay longer in their own homes. Millennials and first-time buyers who don't have any equity are the most stretched because of these high rates, interest rates, and down payments. It's making home ownership harder. Another thing about these delisters is that because they're delisting so much, it's keeping the prices higher. Okay, we don't have as many motivated sellers that are bringing the comps down. And so you're not going to see this crash. It's just not happening. I've been hearing about this crash. Rates are high since rates went up. That was 3 years ago. In LA, we've seen maybe a 1% price decline, but that was after we actually continued to go up. So we're still net positive after all these years of rate increases in terms of home values. So, all right. Now, rates actually have been falling slightly. Now, the Fed has not reduced rates, but the interest rates on these mortgages has gone down. And so we, after 5 straight weeks of mortgage rate declines, homeowner demand jumped as these rates dipped below 6.8 for the first time since spring. In fact, last week, they got down as low as 6.71 before rising. They're now higher than that. I'll give you that in just a minute. But mortgage applications rose 2% last week. They're 18% higher than this time last year. So that's great. We're seeing more mortgage demand on lower sales numbers. So that's good. We're actually seeing some refis and equity lines and stuff like that. Experts, they still think that the rates are going to be volatile. I agree. But the Fed has signaled that likely in July, because of the recent labor numbers that came in, employment numbers that came in, July we're likely not going to see a rate reduction. But in September, they're forecasting that we may see a price drop by the Fed. And that may bring some of the buyers off of the sidelines into the late summer. Sellers are still facing longer sell times, more competition, even with these rates dropped, especially in high inventory markets like Florida and Los Angeles. Let's take a look at exactly where, and here's the article for that. Once again, go over to YouTube or Facebook, and we'll go ahead and you'll be able to see the links to these articles that we were talking about. Let's take a look at our actual mortgage rates. So mortgage rates on June 20th, the last time we did the update, were 6.87. It's down to 6.82. Like I mentioned, it was down to 6.71 last week. So it's come up just a little bit. The 15-year fixed was at 6.13. We're down 10 basis points on that. 30-year jumbo was 6.95. We're at 6.9. 30-year FHA was 6.41. We're at 6.35. And the VA dropped 5 basis points from 6.42 to 6.37. All right, so what advice do I have for the people out there that are looking to buy or potentially looking to sell or just sitting on the sidelines? Let me go back here. All right, what advice? First of all, for the buyers, right now, you have lower rates that have come down a little bit. They may continue, but they're just wobbling at the same place, up and down in the same place, but they're lowest points in spring. We're seeing rising inventory. Negotiate hard, okay? But don't over-negotiate, because these sellers will just take their properties off the market. We are negotiating and getting great deals on our homes. Not only great deals, but great concessions later on as well, and credits. So if you're planning to stay long-term, then buying is definitely the right move. Short-term, potentially you want to rent, but once again, you don't build equity. And keep in mind, that money for rents, just thrown away. You can't write that off unless you have a home business. Whereas the mortgage interest that you're paying on a home that you purchase, that is deductible, and so that actually lowers the cost of your purchase and of your monthly housing expense. For sellers, please be realistic. Okay? Please be realistic about price. Be ready to negotiate, or can just consider waiting out the market. I mean, right now, buyers out there, they're looking to negotiate hard. They think that there's not a lot of buyers out there. There's not. And they think that they have the power in the negotiation. So they expect a lot on the purchase. They want turnkey. They want everything to be perfect. If something's not perfect in the home, they're going to negotiate for it to be made perfect or given credit, or they'll just move on to the next home. Ask me how I know. Yeah, experience. All right, let's talk about our quote of the day. Louis Glickman, renowned New York real estate investor, philanthropist, known for property development in the city of New York. His quote, I've heard this a number of times: the best investment on earth is earth. Why? They're not building any more of it. Even in a shifting marketplace, real estate remains just a really solid investment. A stock market goes up and down. You can drop 10, 15, 20% of your portfolio within a day. That doesn't happen in real estate. And there's always smoke signals that you can watch out for in real estate. That's not the case with other investments and assets. All right. Thank you very much for tuning in. Remember, if you like this video, help spread the word on social media. It helps us so much. Just hit the share button, share it with your friends and family. Really appreciate you guys sticking in. This is Roman Shersher, your #1 online resource for buying property. Have a great weekend.